Happy Friday, everybody. Welcome back into Mining Stock Daily in this week's long-form episode. Yep, I'm back, Trevor Hall, your host once again, and I'm returned home from a quick trip to the Precious Metals Summit in Zurich, and that really was majority of the corporate updates all week this week. My recordings from there, and then we were able to squeeze in a couple other ones throughout the week, which will continue to air later next week as well. So special thanks to everybody who was able to join me from Zurich. There was a lot of information there, and if you missed any of them, please go back and make sure you can and listen to those corporate updates from any of the companies you're interested in. They are found at clearcommodity.net. We are having some problems with Apple Podcasts, unfortunately, and we are working diligently to fix that problem. But if you do listen to this on Apple Podcasts, I would just ask that you try unfollowing and then following the podcast once again, or searching for Mining Stock Daily and refreshing your updated episodes that way. I know it's kind of a pain, but that's what we have found to alleviate the problem. Special thank you to Minera Alamos, Vizsla Silver, and Arizona Sonora Copper for their continued support of the podcast. 2 segments today. First is a long discussion panel that I had in Zurich as the host of the Keynote presentation with Rob McEwen of McEwen Mining and Ivan Bebek of Coppernico Metals. Great conversation, about 45 minutes in length. And then the second segment, we welcome back an old friend, Adrián Godás, and he's got a new book out about the history of mining. And so we talk about putting that book together, and then also some general thoughts of what he's seeing in the commodity space, specifically the metals markets. All right, so long episode. We're going to jump into the conversation right now. Have a wonderful week. Be well.
And I know Claude just mentioned it, but I do want to just give a genuine shout out to the core team this week carrying the heavy torch. Angela, Eileen, Karen, Ellen, anybody else that I may miss. They're standing back there. Please turn around and just give them a clap. Yeah. Yeah. All right. Seriously, job well done. Everything was flawless. So we've got a couple themes to pick up here with 2 Hall of Famers in my book. I know you're a legitimate Hall of Famer. I think Ivan might be on his way here pretty soon. But I think we've probably had the conversation. It's only been a week, and I'm already getting kind of tired of having the conversation, but there's still a lot of unknowns after this U.S. presidential election. We're going to see a Trump 2.0. We're going to wait and see what happens if he's able to fill a lot of these ideas that he did run on. But I'm really curious, as the 2 of you work in South America, Argentina, Peru, in this industry, what does that geopolitical relationship potentially look like with the Javier Milei, and I don't remember what the president. There you go. What do those relationships look like with the second Trump administration?
I think that'd be very good. In late August, the U.S. State Department went down to Argentina, signed a memorandum of understanding with the government of Argentina to develop their critical minerals. And with all the geopolitical strife that's going on in the world, there are companies right now running all over the world trying to figure out where they're going to source their material from. And so you have this agreement with Argentina. President Milei, I had the benefit of spending an hour with him in April, and he talked about what he was trying to do to attract foreign capital. And, he was dropping the tax rate from 35% to 25%. Export tax, he's dropping it by 4.5%, on dividends, 1.2%, and a whole lot of other changes to make mining one of the industries that wants to come. And so I know in our own project that would, by rough estimates, add about $900 million to our NPV. But you're looking at something. He's a libertarian. I loved him when he was going around with a chainsaw campaigning and saying, and he was just saying, "I'm going to cut out the bureaucracy." And so his thinking is very aligned with Trump. And there's a common denominator in there, and that's Elon Musk. When Milei was elected, Musk was right on the call and said, "I'm coming down to say hello and congratulate you." And then when I met with him the next week, he was going up to Texas to look at Musk's launch site and spend time. And then you saw Musk being a very generous donor to Trump's campaign. So I think there's a common factor in there that you're going to see a lot more development going on.
Okay. Ivan, what does that relationship look like from Peru?
Yeah, sure. So I got in Peru in 2015, and as an explorer, I've seen 6 presidents in Peru. I've seen an impeachment. When we went left last, when Biden took office and Castillo was in power, everything was slow. All the communities went really hard against us. It was very, very a slower, unfriendly environment. And now that it's going back right, Dina Bolarte's there, Castillo's gone, we've gone more centric, and with the Republican president, it goes in the right direction. And we're seeing the quickest permit time in 9 years. So they've cut timelines down by half. We complained as an industry at PDAC last year. They listened, they made the changes, but we do much better in South America, I know for Peru and some other areas, with a right or a conservative leader in the U.S. So we're looking forward to that with Trump being in place right now.
Yeah. We saw reaction from markets, leading up to the election, that quote-unquote Trump trade, long the dollar, long gold, long stocks, short bonds. The election happens that night. Bitcoin's running to a new all-time high. The S&P's running to a new all-time high. Bonds continue to sell off. And precious metals were the only ones to decouple from that Trump trade. It kind of hurt. A little bit of a stab in the back, a little bit. But why? It was a raging dollar. And the dollar continues to rage right now and taking a lot of that gusto out of precious metals. Is this kind of short-sighted to think that this is going to kind of continue to take place after he's inaugurated? What would happen to get gold back on track here and kind of calm the water, lessen the volatility, and continue to move higher?
Could we move our chairs forward? Because that part of the audience I don't think can see us.
Sure.
The reason gold was running up has to do a lot with the amount of liquidity in the world and the amount of debt. And that hasn't gone down. And the estimates of how much either presidential candidate we're going to spend is many trillions of dollars. And so that's just going to aggravate that problem. So in the short term, there's confidence in the U.S. as being a place where that economy is going to get going. But it hasn't taken away any of the reason for owning gold. Crypto is probably running, people are wondering, how are they going to move their money? And crypto holds that unique distinction that you can move it across borders without anybody knowing it. And I think that's the big appeal. And it's also digital. Mm-hmm. You can just get on your phone and I've done a trade. But I'm not really concerned about gold right now.
Are you concerned about a rising dollar?
It will increase our costs in some places, but increase our revenue in others. Mm-hmm. So, not particularly.
All right. What is it? What is the forex rate of rising dollar? How does that affect the likes of Coppernico?
Oh, it makes things more expensive because we have Canadian dollars. We've converted at low points of the U.S. dollar. We're not currency traders, but we do our best to kind of protect ourselves because we're spending in U.S. dollars. But there is an impact there for sure. Back to the election comment and the impact on gold. I echo what Rob said about the debt. That doesn't go away just because a Republican or a Democrat won. Neither does the spending plan going forward. We all have heard about the commercial real estate debt, the bubbles that are out there, and they're global. I think the U.S. dollar is the least worst currency, as many have described, but it also works against the U.S. to have that strong of a dollar for a longer period of time. It affects them in trade and other factors. If you're too expensive for the world, you're going to feel that on your economy. So I'm looking forward to a lot of easing, a lot of spending, lower rates, and I think we're going to an environment that's going to really support gold. The dollar's been on a great run. Gold was on a tremendous run this year. It was one of the better performing investments you could have made. And I like that the decline was very sharp and quick versus a gradual tipping that could last longer. And that's more of an indication of a breathing bull market breakout versus a full change in the cycle. There's still time to explore and see how that goes, but I stick back to some key fundamentals of why gold went up, and I think we just got to be patient and look forward to it. Seasonally, gold does very poorly this week and next week, and it starts to pick up at the end of this month, and it takes off into the first quarter. It's one of the best investment periods is the end of November, early December into April for gold. And so it's right on time from a seasonal basis, but it's exaggerated likely because of the election, and there's a lot of confusion out there of where to go, see what Trump's going to do or not do in the second quarter. A strong dollar, we streamline our costs. We're very disciplined with our spending. We brought our drilling cost $100 US below what we thought it would be originally, and that's the best way we can defend, is just watch our spending and be very judicious with our treasury. And that's as much as we can do, but we're a victim of the markets like everyone else that's operating in them.
One of the surprise moves in the past week following the election has been that of copper. And I've kind of been, I don't know if outspoken is the right term, but I've had my concerns about the short-term, almost mid-term outlook for the copper price. And I know long-term there's this huge supply-demand deficit, and both of you are looking to provide supply to the market in due time with your projects. But if we are in this concern of slow global growth in the United States, in Europe, and even in China, I saw a European bank downgraded China's GDP forecast from, it's not big, from 4.5% to 4%. Still 4% forecasted growth is still positive, but the cut have to do in large part due to the Trump tariffs that are being proposed. What is, as copper explorers and developers, how concerned does this short-term, mid-term challenge of global growth pose for both of you when it comes to the copper market?
I'm not that concerned at the moment. With our copper project, we're looking at producing copper at $1.02 a pound. So right now we have a 75% gross margin, and it could drop. We're still financing. We have to raise capital, so the terms might get a little stiffer. But we have a large project. It's the 8th largest undeveloped copper deposit in the world, and 4th largest if you take out the majors, the ones they're controlling. Strong economics. And I think those projects will survive. But yeah, copper is often referred to as Dr. Copper. Mm-hmm. And when it tells the direction of the market, if there's a downturn, it precedes the market because it is so much part of our modern world. You are also seeing other sources of demand coming up. They're not that large, but the energy transition is a big part of it. The growth of the population, you need copper there. And then you have the digitization and all of those demands. The AI, the big server farms that have to come on are heavy, heavy users of copper. So that might moderate part of that slowing demand. But I was just in Paris yesterday, and I had been invited to speak at Paris Peace Forum, and I thought, that's an unusual place for a miner to find themselves. But it was, they're concerned about the energy transition and saying, there's not enough copper coming to the market. There's a shortfall of about 10 billion tons that they see. And can you find mines? How are we going to bring it on, and how are we going to have the social acceptance to bring them on? And I think the mining industry, we have to change the opinion of the public and show them that we're much better stewards of the environment than the picture they have in their mind of what mining was like, the legacy, and show them very strong and good examples of reclamation. And you can think of Sudbury, which in Canada, Inco was there and now Vale, but it at one point was considered a measure of pollution because the acid rain and that came out of the smelter had stripped all the vegetation away. Well, today it's been reclaimed, it's all reforested. And we have to show those examples. And the public, well, from kindergarten all the way through adulthood, have been told that mining degrades the environment. But that's only one side of the story. The other side is, how are you going to get here if you're flying? You're not going to be flying. You're not going to be sitting in these chairs with metal legs. You're not going to be driving a car. There are metals that we pull out of the ground that are essential to modern life. And we need to tell both sides of that story. And only one's being told right now. So I think if that appreciation comes, that'll moderate some of the decline in the copper price.
Yeah, as an explorer, I mean, we look at the rate of discovery. And when you look at how many mines have been found over time and how few larger world-class quality mines are being found today, the easy ones sticking out of the ground where there wasn't social issues or geopolitical tensions, those ones are predominantly halfway through production right now. You look at the giant dinosaurs in Chile. I'm using a bit of Friedland's term there, but they're getting deep, these pits. They're getting very deep, so their threshold and cost is going to go up to move that copper all the way back up. We're at a point where exploration has been underfinanced. Copper exploration is extremely expensive. It takes a long time to find a major mine. We're starting to drill for a major copper discovery, and we're looking at a 2 to 3 year window to reveal maybe 2/3 of the opportunity. By the time this mine makes it online, we'll be well past the deficit curve. And it's not that we have this guaranteed mine to find yet, but others looking for it. The pace of discovery on a copper mine, it takes time. The social impact, the permits, they take time. It took us 9 years to get the drill permit to a major copper opportunity, and that's the part that you have to sort of digest with an outlook for copper. In my view, gold has been much more reactionary to geopolitical events, economic events. It moves quickly and it moves by surprise, but copper's been the long bull market. It's slower to wind up and it lasts a lot longer. And if you look at the copper price today, or when I got into the industry, it was 59, 60 cents a pound. I think copper will, I believe strongly, copper will be a perpetual performer until the day that I pass. And that's just going to go on the rate of mines that can be found, brought online. The counter argument is, if you move the price up high enough, you can bring these low-grade mines, there's plenty of them around the world online, but you can't produce faster. There's still going to be a pace of production, capital intensive. You can't produce any quicker, and when you go down to those low grades of ore, you're now moving a lot more earth, and you're causing a lot more of an environmental concern, to the points you're making earlier. You're creating a much more environmental impact and social impact. Our challenge as explorers, even at the exploration level, is extreme social. There's a lot of challenges when you start talking about finding a big hole in the ground somewhere. And then when you work through that, environmental stewardship and responsibility, we're fighting a lot of trends. So I think discoveries are going to be slow and few. There's very few geologically assets of quality in good jurisdictions that you can bring online in a time to be impactful. So we're going to see a really big problem that's going to continue. I'm not worried about today's copper price. I'm drilling for tomorrow's copper price and the year later and 2 years after that. I'm just happy that we have a major swing at what could be a potential big supplier of copper for the world going forward. So my perspective as an explorer is that let's just think long-term, bigger picture. These things take time, and if the asset starts to come together, it's going to perform perpetually over time.
Yeah. I've had a number of conversations over the last couple months, and actually spurred from conversation with some friends during London Metals Exchange Week last month. And the question in the conversation is not really posed on finding big scalable deposits, and but the question is, we were kind of talking about it, if you remove the top 10 development stage projects such as Los Azules, are we poised with a grade problem? So there's not enough grade within those deposits to carry at this current copper price, that it would have to, the price itself would have to rise to carry those projects into profitability? And we talk about scale, right? But not very often do we talk about the grade, the scalability of the grade that's available.
There's been a very discernible decline in the grade of deposits being found. So that means you're going to have to move more material, which means you have to put more capital into the ground. And then you have to look at the economics. And so if you had a weakening of the price, a lot of those projects would become options on future price. rather than developed. And it would aggravate the supply problem.
Right. Okay. I just was thinking about that conversation as you were speaking of. Sticking with the copper project, I want to ask you about merger and acquisition cycles. Not too long ago, we saw the $4.5 billion sale of Filo down Argentina, and so that is off the market. Where are we in the M&A cycle here when it comes to tier one deposits?
Oh, we're right in the middle of it.
Yeah. Right in the middle. I mean, more to come.
Well, you saw BHP go after Anglo. It was a $37 billion bid first, and they moved it all the way up to 47 or 49 billion, and the Anglo shareholders turned it down. So where's BHP go? They go, oh, let's buy Filo and Jose Maria. They're in the same province we're in. They're at a higher altitude than we are. They have a lower grade. They have less resources combined than we have. We're trading at $1 billion implied, and they're at over 4. So I'm thinking, well, there are people looking around for large deposits. I think the big companies, Barrick is looking for copper. They saw the large cash flows they were getting out of Zaldivar. You're looking at Fortescue came into Argentina looking for it. I think people see that as the energy transition. As Goldman Sachs said, they thought copper's the new oil. So I think you're going to see more of it. You're going to see more of it in the gold space as well, because it's been an overlooked space. Gold is probably represents 1% of the financial portfolios around the world. And yet we're moving into a period where gold is going to become a more important asset to hold.
So are those projects that are in later stage development, I mean, you expect to see more of those acquisitions by majors?
Yes. Their first preference is getting production. Their second is a permitted property that has a feasibility study. And then there's the others, the exploration stories that see a large deposit that hasn't got the market following right away, and they want to jump into it.
Yeah, we've seen several majors have had interest in our project, and when Teck became a 9.9 investor, they were bidding against 2 majors much bigger than them, and we didn't want to give away control, a ROFR or 19.9, because that would eliminate our competitive interest. But watching that environment, some of my board members were senior execs at BHP, and I've got a full rundown from a lot of what the majors are thinking, and listening to the anxiousness of the majors on this copper race that we're in. And it's a great point with Anglo and the BHP transaction. The second thing, as an investor, can you make money if you find a big copper deposit if you're advancing it? Filo is one of the best performing takeovers in the last 3-4 years, as far as an investing part of this market, which has been quite tough in equities. That's the first one we've seen in a while. So I think that's a clear indication of foreshadowing of what's to come. I think projects with heavy capexes, they're going to be patient with those, or permitting or social challenges, as Rob's made a comment here. But it's kind of a market that everyone's looking at, where do I get growth? Where do I go next? Where can I find long-term growth? And generally, from what I've seen in my 24 years, is that eventually everybody reacts at the same time and they react late. And then you get this flurry of transactions and it recapitalizes the market well. Copper was $5 a pound in May of this year, and we raised a great financing with Teck coming in, and it was a competitive environment. That buzz has kind of stayed with a lot of investment funds because they can see this market going in the right direction. It's just slower. We're a bit early with our equities and the junior side of things. I think everyone is right to be long and uncomfortably long juniors at this stage of the market. You're just early. And eventually it's going to change and it'll go the other way. But seeing that transaction go up, seeing the efforts with Anglo, listening to a lot of the desires in different places. If you have a good asset that has scale, the phone keeps ringing from the majors. That's what we're experiencing as I sit here today.
Yeah. I mean, we've seen majors take, small steps with development projects and more like a JV space, but I'm just kind of curious, when we talk about an all-out acquisition, are the majors kind of tapped out? Because it's one thing to acquire companies with the projects, but then you start talking about massive capex to build these things. And so it's, you don't just buy the company and then go build the mine. You got to buy the company, then spend the money to build the mine. And so it's getting very, very expensive. So I'm just, with that, does it feel like the acquisitions as a whole by majors, are they tapped out at this and now starting to look at maybe more curious ways of getting a foot in the door with good projects more on the JV, strategic investor level?
They want to be the operator. Their treasuries are swelling right now. I mean, you saw Rio, $6.7 billion for a lithium producer just a month ago. BHP prepared to spend $49 billion. They have the balance sheet that they could borrow against. As I was saying, grades are coming down. They're reaching their older mines, mature mines that are coming closer to their end, that need a lot of capital, and they're looking for something fresh. So I think they have the balance sheets to keep going, and the market's willing to give it to them.
Yeah.
On the exploration side of it, when you're looking to buy something and recoup your capital, we sold Caden to Agnico Eagle. Their measure was, can we get our money back of what we spent, plus the cost of building it break even, and how much upside is there after that? That was the key factor, and I think a lot of those transactions are guided by that. That's why having something that could be bigger, longer term makes a lot more sense for a bigger price tag early, right? Long-term growth, and some of these mines have 100-year mine lives, these big ones. That's going to secure a portfolio in one transaction and save them several transactions. On the junior side, being an explorer and looking at several other juniors that trade at 4 or 5 cents a share that need capital or have debt and are out of money, you look at it, and what I'm seeing now is this industry needs to consolidate 3 to 1. It's way too pregnant with too many mouths to feed on too many good assets. And looking at a few great opportunities, the first thing I see is a burn rate. Project burn rate, $150,000 US a month, just to keep the lights on for a project before you turn a drill. That's serious money. That adds up quick. And I see why these copper explorers can suffer in this environment. Everything we've talked about has had a denominator of capital. Rob's pointed out about the CapEx increases as you go deeper, as you go lower grade. There's a big capital drought for the juniors, although there's a lot of capital that wants to come in. Where are the assets worth coming into? And some of the better ones are getting financed right now. That is changing, and I think it's going to improve. But there's certain management teams, I think, that are capable to get the capital, but not everyone's going to make it through, even in a bull market environment, because investors have been caught by these expensive projects going after these big swings.
Yeah.
So capital's key.
Yeah. I'm glad you mentioned the gold mining market, because I'm trying to phrase this question for you, Rob, that and the question back in the back of my head is, why does Newmont suck? Q3 financials come out. It's a miss. They're down 17% in one day. It's the highest weighted stock in the GDX. So the GDX gets hammered, brings down everything with it, double digits, one day. And it's just this company, we put so much weight in this, in Barrick too, but Newmont really is the bread and butter of liquidity in the gold mining space. And I think a lot of us are having this conversation about, do they deserve it? Do they deserve to be up there and carry so much weight when they miss quarter after quarter after quarter, but yet the institutions and the investment funds can't seem to remove it from their portfolios?
They're big, they're liquid, they're on the big board, large production. It's something institutions can move in and out of easily. Just on, if you keep missing quarter to quarter, I've already gone through that with McEwen mining from 2019 to 22. You get penalized. Your shares go south really quickly. Newmont, I guess it's just getting caught up in the cost increases that are coming through the industry, and consumables, labor's going up as well. There are a lot of cost pressures moving there. But I can't say I've really followed them that closely. I've always felt that I never want to follow a major to get to a destination, because all I'll do is eat their dust. And by the time I get there, they're probably why I wanted to go. It's changed.
Yeah. Well, some of those assets that they're working with are former Goldcorp.
Yes, yeah, but I had left Goldcorp before.
Okay, so you don't claim any of those. That's it's just very interesting how very few companies can pull so much weight, and even it covers, it does affect even the explorers, right? Because when people see the volatility, the dash of liquidity out the door, people are like, well, this is over. We just can't have nice things as gold mining investors.
Yeah, the liquidity, and Newmont being number one as a gold one, it's an easy one for a generalist to invest into. The biggest one, the most liquidity, but it's also an easy one to leave too. So it does give it a bit of a double-edged sword. It does affect the sentiment of the juniors right down. Generally, we've seen the majors perform first and the mid-tiers, then it came down to the juniors. And if they're losing at the top, in a good gold environment with crazy gold prices, there's either an issue with their growth pipeline or their assets, or they have some questionable assets. But we've been fighting the mining sector and the environmental persona non grata kind of treatment for some time now. So I think it's a battle of more, and there's a second choice, which is cryptocurrency, which is performing. So I think there's a lot of torn investors. There's not clear direction yet, and we kind of got people with half a foot in as well. But the more liquid you are, the easier you are to go to on a bad day, as well as it is on a good day.
Yeah, absolutely. So where is, if you look at the chain of gold producers from majors, mid-tiers, developers, down to explorers, as we speak here on November 12th, gold's down, the whole market's down today. Where would you say the best opportunity is? If you wanted to catch a falling knife, where's that knife?
It depends on your risk tolerance. It really does. I mean,
it's good. Well said.
If you're looking for a safe place to put your money, you might try some of the majors, even like Newmont, or the safest would be gold bullion. And then you want to look at where you want to be. For me, I live high up the risk curve because that's where I've had the largest returns. And I buy juniors. I buy them usually in private placements, and I'll buy 10 to 30% of just when the market doesn't want them. And you can look back, there were 3 gold manias where you saw returns. The producers were, small double and, the small triple digit returns, a couple of 100%. You saw the juniors with 4-digit returns average, 1,500, 2,000 or more % returns. And these areas are they're just destroyed. No one wanted them. You can pick them up very inexpensively. And when the market gets rolling, they suddenly start moving. And there's some, stories like Diamond Fields. Now that wasn't gold, it was nickel, but it went from $4 to $160 in about 6 months. Yeah. You can look at Hemlo that went from pennies to, I remember buying it at $3, and 2 months later it was at 21. And that was an area play. And you have some of these juniors, you got to be a little selective, but you start seeing a movement. And a week ago, before gold gave up, before Trump got elected, I was looking at the GDX index and the GDXJ. And the GDXJ, which is, the X is for the seniors and the J is for the juniors, and it was coming up through the GDX, suggesting that there was more money coming into the juniors. And if gold kept running, which I think it will as we go forward, you'll see that climb much higher. So, as I said, depending on your risk profile, if you have an appetite for risk, you look at that. If you just want exposure to gold, which I think you should have, you could go into the bullion, the seniors, or even the intermediates, because I think that's space. And the seniors have, at $2,700 gold, the seniors are just accumulating all sorts of money, and they're looking for pipelines, growth pipelines. So they're starting to reach down into the intermediate and even further into the juniors. So if you're patient, you believe that gold's going higher, you have a couple of options.
I like Rob, I like the risk curve a lot, probably like risk more than anyone in this room. And the juniors have returned substantial wealth for me over time, and many investors when we got exploration right. I've made little money with big positions in big companies. At this point of the cycle, to listen to Rob's comment, which I entirely support, watch your risk tolerance, but I think there's more opportunity in the mid-tiers and the developers that are coming online in the next 18 months than there is in the majors. I follow Agnico Eagle well. I've owned it for a long time. Went from $40 to over $100 per share Canadian. Does it go to 200 next or 150? You know, that yield curve starts to come down, or potential return that you can get. It's safe, but you don't get the returns, the 1,000+% returns. I would add the caveat to financed juniors or juniors that are capable to finance. If you can find a junior that has 12 months or more of working capital and capital to work, I think that's a good one to take a bet on, because that's long enough to make it through this turn that we're in right now with the market. You can't expect a junior to have 2 or 3 years of working capital. That market doesn't exist very often, even in a bull market, and that would be too dilutive for a junior at current prices to finance. But if somebody has 12 months of working capital, or the financing and purchasing will give them that, plus money to market themselves and do their drilling, I'm in. And those companies are still being financed at cheap prices. I think the disconnect between the speculative value on some great opportunities that exist out there and what they could be worth in a better market, I think that disconnect is massive, and I don't think the opportunity's been better. If you asked me 3 years in a row, do I think you should buy mining stocks today? I'd be biasedly yes. I said I would think you should. I'd be right on seasonality, but I'd be wrong on point of market. Why is it different today? The election was an excuse for everyone to wait and see what's going to happen with the economic policies, what changes are going to entail. No one knew who was going to really take that election. I spent a lot of time in the US. It was right to the wire for many. And I think that uncertainty, as it unravels, and as the debt that Rob mentioned unravels, I think we're at that flexion point where you can be uncomfortably long the junior sector in the right names that can make it through. If you're in some that can't make it through, as long as those management teams hibernate until a better market and they stretch themselves through, you're fine. I focus on the asset first and the management team. Those two things matter most. If those are in place and the treasury's there, or there's the ability to get treasury, those are my check marks that I look for.
I'd like to qualify something. Well, from my standpoint, there's an invasive species in the mining industry, and it's called royalty companies and streamers. And there are a number of junior companies, producers and explorers, that feel compelled to take money from a royalty or a streamer when they feel that the equity markets are hard to get money from. But they're giving away the future. And I bought one property. It was a distressed property, but it had a royalty on it. And it irks me every time we have to cut a check, because we have to sell 8% of our gold at $600 an ounce. And that was put on by a previous group that every time I look at the guys doing it, I think they never took math in school. They just don't understand what they're giving away. So if you're looking at juniors, watch and maybe ask them not to sell royalties, and ask how much money have they invested personally in the story. How committed are they to the story? They talk a big story with no money in. Well, you have to hope they hit a home run. But those are two areas that really are key to me.
I think we should do a podcast with you and Montage Gold about their financing package that was all stream and debt. There was no equity on it. It was really $825 million. It was quite an interesting deal. So CEO Martino and I had that discussion on the podcast last week. I'll send it to you.
All right.
It's really good. We got a couple minutes left, and I'd like to get back to the roots with exploration and the risk curve. I thought it'd be kind of fun to what's Mr. McEwen and Mr. Bebek doing with their money? What's that risk capital doing now? And if I may, I'll start by saying in the last 6 months, I've done 3 private deals, Kazakhstan, Malaysia, in the unknown wilderness of Idaho. And I'm just quite interested in finding new underexplored areas that have really interesting prospectivity. Maybe they're home runs, maybe they're duds. Where is a really excellent place, an underexplored area in the world? You can't say Argentina or any place you're operating in. You can't say Peru. But it seems like, quite interesting that maybe has been overlooked and could use a little bit of attention.
Rob, you can say Peru and I can say Argentina.
Okay. Deal.
But I do like Argentina for that.
So do I. I would say there's a company, OMI, and it's got a big oil find just offshore. The economy is there's money rushing into the country. There's infrastructure being built. There's an old mine there that I think the president of the company, she's at the conference, Elaine, and they're building a resource there. It was a Cambior's project at one point. So there's that. Royal Roads is, well, I'd say Saudi Arabia is a game changer right now. I'm really impressed what they're doing. They're offering to give money back on exploration. They're saying you can own 100% of the project rather than formerly only having to give away 51%. Tax rates are low. Labor is inexpensive. Transportation they go by sea, it's so easy. And they have a ton of money. And the Crown Prince wants to make mining the third leg of their economy between hydrocarbons, chemicals. And you go over to Saudi, and I was over there earlier this year, and I mean, buildings are popping out of the ground, but they're really anxious to get mineral exploration going. In Canada, just a couple of companies I like. Canada, maybe it's not overlooked, but it's there. There's Power Nickel. Terry Lynch is in the back of the room. He's got some great things going. There's Borealis that's sitting in Nevada with a property. There are a lot of stories out there that I think are worthy of taking an investment in. And I'm sort of a sucker for high grade. So someone comes in with a story and says, we've got a really rich drill hole. I said, well, how much bigger is that? And you just start going. I mean, Goldcorp's, our Red Lake mine, I mean, the company ended up going from 50 million to 8 billion. But our Red Lake mine, we were producing 50,000 ounces of gold at $360 cost. A mile below surface, we found a rich ore vein, and we tore down the plant, built a new plant, and when the new plant was running, we were doing 500,000 ounces a year at $60 cost. There was a 60-fold change in the economics. And you see some of that with technology coming around, like heap leaching opened a whole new space. BioLeach and SXEW is for copper. Only 14% of the world is annual production, only 14% is producing cathode copper at site from SXEW. So technology can open up areas. Newton, an arm of Rio, which is invested in our copper project, they have a process, it's a biological process, that they feel you can get mill-grade recoveries out of a BioLeach rather than building a large process plant that produces tailings that frighten everybody downstream. So I'd say some areas are new, and they just haven't been explored, or it's a different look.
Ivan, where would you go lick rocks if you could?
So on that, I like really big things, big swings, going for the big one, and Ecuador is one on the top of my list. I don't think it's there yet today, but I think it could be there tomorrow. The endowment potential there is massive. It's a place that I think is going in the right direction, so I'm looking there for next wave of things. And then I'm a sucker for Nevada because they have massive gold discoveries there. There's one called Silicon, that's 12 million ounces with Anglo. There's the Getchell trend, and I'm involved in a junior that has a couple big swings to replicate another Getchell trend or another Silicon, or they'll have that soon. But I won't mention names yet of that company, but I'm still accumulating. But I like that a lot. I do like Argentina. I've looked at many projects there, and the changes and the comments you've made about it are really enticing to me. I know what's gone wrong in the past, but That's a country that has a lot of endowment potential, and it was kind of risen to a different persona for some time, which is changing. So I'd say Ecuador and Argentina are my South American ones that are of interest outside of not talking about Peru and Chile. But I would also pick Nevada just because it's, you have to look at two things. Where can I find a big one, and where can I get paid for it? It's a little harder to get paid in geopolitically tough areas, but Nevada is the backyard, and one of the biggest retail networks in the world is Americans, and it's, if you find something there, I mean, you guys had success with Goldcorp there. It's a great place to take swings, so those are mine.
Yeah. Very good. That's all the time we have.
Yeah.
So we shouldn't keep people away from their wine or their beer, but I wanted to say again, thank you to everybody for attending this keynote, and for also the team for doing such a great job. I hope everybody has a wonderful evening. Go enjoy a drink, and please get home safe. And Rob and Ivan, thank you so much.